Hello everyone and welcome back to another edition of Trading 101. This is Will Gomez for the Perpetual Pip. Let's go ahead and let's get started with this lesson. Today's lesson is going to be on what is a candlestick. Now when it comes to trading can be, as we've discussed before, very alluring, but the necessities of becoming familiar with what the market is doing and being able to an extent, predict with a reasonable degree of certainty what it's going to do is one of those things that tends to make aspiring traders very, very nervous. Even traders that have been at this for some time sometimes experience a little bit of trepidation when they take a look at the chart and they don't feel that they fully understand what's going on the chart. So what we're going to do is we're going to try to clarify that a little bit today here. First with a high-level discussion, and again, as we progress through these lessons, we'll get more and more technical. Let's talk about a chart. This is known as a candlestick chart. Now, although there are going to be several different options when you take a look at charting and looking to make market decisions, the reality is that most traders are going to be looking at Japanese candlestick formations. The reason why traders tend to prefer Japanese candlestick formations, myself in particular, is because I believe that the candlestick provides you with a more in-depth, albeit subtle, but it is definitely more in-depth information as far as what the market is doing and the ways that it ebbs and flows. Okay? What a candlestick actually measures, the whole function of a candlestick, is to measure price action against time. Right? So when you take a look at a daily chart, if you ever hear someone say, I looked at X time frame chart, right? If it's a daily chart, hourly chart, minute chart, whatever the case may be, when you look at whatever time frame chart, you are determining a period. If I were to compare this to a boxing match, it would be a round, right? You're determining how long that round those two contenders are going to battle against each other. And that's realistically what's going on here on these markets. So Japanese candlestick formations effectively show us what happened very accurately throughout the course of an open period. There's a very real battle going on these charts. All right. Now, the battle that's going on is between two different contenders, as I mentioned before, and the contenders are the bulls and the bears. Some of you have been to the United States and maybe even been to Wall Street and seen the Wall Street bull, right? These are animal representations. Aesop would be proud. These are animal representations of market behavior. Okay, so let's explore this a little bit, get a little background on this. When it comes to how a natural bull reacts to danger, when a natural bull attacks, what it does is it stabs upward with its horns, right? Some of you have seen the running of the bulls in Pamplona in Spain, right? You see that when some unfortunate soul gets in front of this animal, sometimes they get gored, they get thrown through the air. Now that's a little graphic, but the reality is that that's how the bull attacks, right? It stabs upward with its horns, it throws its prey upward. So just like that, when the market is being forced upward in an upward slope from left to right, that's considered to be a bullish movement or a bullish market. Okay? On the other hand, you have bears, right? What happens with a natural bear? When a natural bear is attacking another bear or a prey animal, whatever the case may be, the bear will swat down with its paws. So naturally, then, this same behavior, market behavior in a downward slope, is considered to be bearish, right? Now, when you take a look at a candlestick formation, or a candlestick, I should say, formations will come later. When you take a look at a candle, your candle is essentially a blow-by-blow account of what happened in each round. The length of the round is determined by you when you choose a time frame. Okay? So you're going to be able to see who won what, who moved the market to what price, and for how long on these candlestick charts. Let's talk about how a candlestick is actually built, right? This is the anatomy of a candle. Now, first things first, every single candle is going to have an open price, a close price, a high price, and a low price, right? Every single one. However, what determines who won the match is going to be which direction it has progressed. So the way that we determine that direction is based on the open and close price. In the bullish example, right, as we mentioned before, bullish candles, as I've mentioned in different lessons, I've taught so many, sometimes it overlaps. When it comes to bullish candles, all right, I'll let you know right here, right now. Bullish candles tend to be colored in a light color. All right, bullish candles, they tend to be colored in a light color, excuse me. That is not what determines that it is a bullish candle. What determines that it is a bullish candle is that a bullish candle opens at a lower price and closes at a higher price. If you think about the price action, if at the beginning of the round, ding, the battle is fought and fought and fought, and at the end of the round, ding, they move the market to a higher price than what they started at, the progress has been generally in the direction of the bulls. That is what makes a bullish candle. On some charting softwares, you'll notice that by default, bullish candles are colored in green. Most more modern softwares will have this by default. Bullish candles will be in green, bearish candles will be in red. If you use FXCM, one of the broker options, their broker charts, they prefer like a red and blue. So your bullish candles will be blue and your bearish candles will be red. However, it is very typical that the bullish candle is lighter. In any case, you may come across different analysts, different instructors through your life in the Forex or in any exchange. And so I want you to actually understand that it is not the color that determines which team it's for. It is the price action. Price action, price action, price action is what's going to determine what kind of candle you're looking at and ultimately which direction you trade. So once again, for a bullish candle opens up at a lower price and closes at a higher price. The opposite can be said for a bearish candle. Bearish candles are usually dark in color. On the software that I use, TradingView, by default, it's colored in red and green. So your bearish candle will be red, right? Now, that is the most common type of color blindness, red-green color blind. So if you come across that and you can't really make out what's on the chart, again, very, very important for you to actually understand what's going on. Know that the open and close price are what's going to determine who's in charge, who won that fight. Okay, so bearish candles open up at a higher price, they close at a lower price. Protruding wicks, okay, these things that stick out from time to time from the candle. Protruding wicks are simply historic markers of what price has been achieved during that candle's open time. Okay, so as long as this candle, let's say that this was an hour candle, during the course of the hour, the market opened here and the bulls push. At one point, they were able to make it to this height, but then fell back. They couldn't sustain it, right? So they leave this little wick behind to kind of let you know we were here. Right? Same thing for when a wick sticks out to the south of a candle. When a wick sticks out to the south of the candle, that means that during the time that this candle was open, the bears were able to force the body of this candle down here at one point, but they were forced back up. Okay? So they leave this little wick behind, a marker that they were able to achieve this. Your high and low will always be located in the same locations, above the candle and below the candle respectively. No matter what candle it is, the high is always going to be the highest price that was able to be achieved, and the low is always going to be the lowest price that was able to be achieved. You're going to come across several different types of candles. They may or may not have wicks, right? But we're still talking about the highest price achieved. Let's say that this wick wasn't here, then the high would simply be the same as the close, perhaps. All right, so this is how a candle is broken down. This is how a candle conveys information to you or starts to convey information to you as far as its intent. We're going to start to add these little hints together to be able to make full sentences in the language of the candles, which we'll talk about in the next lesson. This has been our lesson on what a candle is. Hopefully you've enjoyed it, and if you did, make sure that you give us a like and subscribe for more content if you're watching us on YouTube. If you've decided that you want to be in a more warm atmosphere, feel free to join us at perpetualpip.com. You can register for an account, and access to this content continues to be free. My tutorials are completely free. You can watch them in perpetualpip.com in the tutorial section under Learn to Trade. The next lesson is going to be what is a candlestick formation. Hopefully you'll learn enough with these lessons that you'll feel confident enough to join me in a live session, in a live trading room, which I host every day, Monday to Friday, 2:30 to 5:30 a.m. Eastern Time, where I'm actively looking for opportunities, as well as providing more thorough instruction on the different strategies that I use. This has been Will Gomez for the Perpetual Pip. I'll see you in our next lesson. What is a candlestick formation?